Alrighty, guys, welcome back. Today's date is June 14th, 2021. So, we're going to go over a lesson. I'm going to re record this as I am right now. Last Friday, during the live stream trading in the Discord, we talked about the Vwap trading strategy. Now, I told you guys I would re record this for you, as I'm doing right now. So, let's break into this. So you guys hear me preach to you all the time. Break down charts. Break down 1 minute, 3 minute, 5 minute, 10 minute. Figure out what time frames you specifically want to track. So, for example, my favorite time frames. Well, first, what are you? Are you a day trader? Are you a momentum trader? A short trader? Are you a swing trader? Do you like to swing stocks and positions for a half hour, couple hours, couple days? There's all these different types of traders in the markets. So first, pinpointing what type of trader you are. And that's the important thing. When you're in the stock market and you're brand new, you don't know what type of trader you are yet. So you have to learn everything surrounded by you in the markets and actually learn to understand how to read these charts, the candlesticks, and the multiple time frames. So with that being said, determining what type of trader you are, for me, I'm a day trader. I normally 100% of the time always go long. I'm always taking long positions. So, and I'm a momentum trader at that. I like to trade fast moving stocks. I'm a momentum trader. So for me, my favorite time frames to look at is the 1 minute time frame. I can really zero in on my entries and my exits and pick up on little details from the candlesticks at significant price levels. You guys hear me all the time preach and talk about how important it is for me to pay attention to psychological price levels. $35, $40, $41, and so on. I like to use the 3 minute time frame. You can use the 5 minute. It's just personal preference. For me, 5 minute is a bit too long. 3 minute is just perfect. It's not too small. It's not too big. It's right in the middle. I've always gravitated to the 3 minute time frame, and I've learned this from Madaz. When I first started learning, I picked this up from Madaz Trader. The last time frame here is the 10-minute time frame. I don't really like to look at hourly charts, 65-minute charts. 30-minute charts I'll pull up sometimes, but like I said, I'm a day trader. I trade momentum. So the 10-minute time frame for me is the biggest I need to see a big picture form and set up. I think that a lot of very good momentum plays form on the 10-minute time frame to take advantage of. Everybody's different, like I said, and everybody views the market differently. We all have different beliefs about the stock market. So going back to when I was saying, break down these charts, the 1 minute, 3 minute, 10-minute. Why did the stock make this move right here? Break it down candle by candle and put it together. Because everybody, doesn't matter who you are, we all look at and view charts differently. Some people see opportunities that other people don't. I see opportunities that somebody may not even like or pay attention to. So we all have different eyes. Now, with this little trading strategy here that I'm about to talk about, it's just a little simple VWAP bounce. That's all that it is. So VWAP, if you don't know what it is, it's volume weighted average price. And it really picked up in popularity within the last, I'm going to say, 8 to 10 years. It's picked up in popularity. And every single YouTube channel that you go to, if they're a day trader, I guarantee 95% of those people all have VWAP plotted on their charts. It's a must. Everybody uses VWAP. Everybody. So, with that in mind, everybody has the same indicator plotted on their charts. So, more eyes are on this indicator, resulting in it being more guaranteed or more likely of working. So we were talking Friday. All you really need is one simple trading strategy, one play in your playbook to consistently pull money out of the markets every day. And one simple play like the VWAP bounce could do that for you. So you just have to patiently wait. Some examples we can go through and talk about. The first one I'm going to pull up here is U1. So Friday, we're going to zoom in on the day we were talking about this. So U1 had a run from $16 all the way to a high of $24. That's a really big move. That's a $7 move to the upside. But for us as traders, we don't ever want to try to go after the whole pie. That's how you get greedy and that's how you can get burnt. My goal as a trader is I want to take a little small slice of that pie every day. Just a little small, if I can get a little small slice of a $7 move like this every day and pay myself, that's where all the money starts piling in and adding up. So we know everybody has VWAP plotted on their charts. Everybody sees it. You could have watched this stock make this move all the way up to the upside and not even traded it. You had one opportunity right here forming a wedge just above VWAP at 1750. There's one opportunity you could have taken advantage of. And then just kicking back, letting the stock run up and top out, runs all the way up to 2420, and then just patiently waiting. The stock comes all the way down to this orange line, which is the VWAP. And look at, from $21, it bounces right off of it up to $21.50. So a nice little 50-cent scalp on that. Pick up 1,000 shares, bounces up 50 cents. That's $500 in your pocket in a minute. So let's really zoom in on this real quick. Break it down. Look at that. From 24, just grinds all the way down to 20, just below 21, kisses the VWAP at 2075 and snaps right up to 2150. So it bounced 75 cents to the upside. Comes down again, kisses the VWAP again at 2075. This time it rips all the way up to 2250. So this bounces up, what, $1.75 to the upside? I mean, you pick up 1,000 shares of that, even riding it up $1.75. That's $1,700 in your pocket within 5 minutes. So that's one example. Let's look at another one. NCTY from yesterday, Friday. Zoom in on this bad boy. You could see how the stock, look at how it moves all to this VWAP. In and out of the VWAP in the morning. Then going into the afternoon trading hours, it gets up above it, pulls back, holds VWAP at $17, and from 17 gets a nice ramp to 18.50. Then pulls all the way back down to the VWAP, bounces right off of the VWAP, right on up. Traders like to use VWAP also. The saying goes, if the stock is trading above VWAP, it's bullish. If stocks are trading below the VWAP, it's bearish. These institutions use VWAP. They try to, if a stock is above VWAP with these institutions, the closer that they can get filled at VWAP buying, the better. Now, if they're selling and stock is below VWAP, the closer they can get to the VWAP when they sell, the better. Let's look at another example. LEDS. And I keep going back to Friday because Friday was all the good examples. We'll even take a look at some today as well. But LEDS, looking at the 1 minute time frame, runs all the way up from $17.75 up to $20.50. That's a good move, guys. And look it, slams right down, hangs out right at the VWAP, right at 1850. And from 1850, this pushes all the way up to $23. That's a $5, $4.50 move to the upside. That's insane. That's opportunity right there. So let's take a look at a couple more examples from today. Oh, look at NOVN having a nice move today from $14.50 all the way up to $20.50. Now, right here in the morning when it starts perking up and taking off, let's zoom in on that. Starts perking up, taking off, comes down, holds VWAP, and it's at $16. You notice how every single time as well, I'm paying attention to what the price is at. It's pretty ironic when these stocks pull back, how they just hang around or play around at psychological price levels, whether it be whole dollar levels, 75 cent, 50 cent, 25 cent. That's because everybody is buying and selling around those areas. So from VWAP at $16, ramps and runs all the way up to $20.70. These are some really, really good moves. Dollars at a time. And all you need to do is pick up 1,000 shares, ride it up, take a little slice of the pie, and you're walking away with good change in your pocket. Do this every single day. It adds up at the end of the year. It really does. Think about it. There's 5 days in a trading week. There's 4 weeks in a month. So 20 days a month. $1,000 a day. That's $20,000 a month you could be potentially making if you just make $1,000 a day. Do that for a full year. That's $240,000 a year. That's $250,000 a year. Where else are you going to go in the world to make that kind of money besides real estate? You know? So even after NOVN tops out right there, look what she does all lunch hours right here. Just all day, back and forth on the VWAP, just bouncing off that VWAP like a basketball. Really good bounces too. From $18 popping up all the way to almost $20. That's a $2 range. So every single time it comes down to the VWAP, bounces right up. Think of the VWAP as a trampoline. It's going to come down. It may violate it a little bit. It's not going to be perfect. But a trampoline, you got that elastic. It's going to come through and then it's going to snap and push right up. That's what you want. So look at it. Comes all the way down through VWAP, paying attention to that psychological price level, $18. put your risk below 18 at maybe 1790, maybe 1775. You're willing to risk 25 cents to potentially make $1. So that's a 4-to-1 risk versus reward. That's really good. Most traders strive for 3-to-1 or better. So from 18, snaps right up to 1975. Right back down, bounced right off the VWAP. Right back on up. Comes back on down, comes through the VWAP. It does violate it, but you got your risk below 18. You're not getting freaked out. From 1825, get in, all the way back up to 1950. Back down to 1875, right back up to 1975. Just little momentum scalps, back and forth, back and forth. That's all you really got to do. That's day trading. So one little strategy like that, you could just solely pay attention to when stocks come down to the VWAP, paying attention to psychological price levels, determining how volatile a stock is, and being picky about what you're trading. If it's a stock and it's got light volume on the day, nobody's really paying attention to it, the risk is going to be a bit higher of it falling through VWAP. But remember, the more eyes you have on a stock, 95% of people all have VWAP plotted out on their charts. Chances are it's going to bounce off of that VWAP. Another thing to keep in mind, and this goes with support and resistance. Anytime a stock tests support or resistance, the more time it tests those areas, the weaker it gets. So consider it like a basketball. You know how you drop a basketball from very high? It gets that first big bounce. And then as it goes on, the bounces get smaller and smaller and smaller. And the basketball just slowly putters out. Kind of like what this is doing. The first big push there gets that slam down, bounce. 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 Every single time now it comes down and tests that VWAP down here, it's just getting weaker and weaker and weaker. And then the floor is going to fall out. And then that's when the stock's going to free fall to the downside. So let's look at another example. AMC. We can go back, Friday. Again, you can use VWAP as support and resistance. See right here, if we zoom in on this day, you could see the stock ran up. And then when it came down, it did bounce off that VWAP. But then it eventually fell through VWAP. And then it was just a downfall. And when it would bounce back up, now you can see the VWAP was reacting as resistance for the stock. So there's multiple different ways you can play around and trade with VWAP. Multiple different ways. Let's look at another example here yesterday, which was Friday. So you see the stock opens, comes up right here, explodes up over that VWAP here at $44. It explodes up and runs up to almost 45, so $1. Comes back down right here. You could see it all day. Bounces right off that VWAP at $44 and runs up to $45.30. So a nice $1, almost 50-cent bounce. Comes back down, bounces off of it again, falls through it. Now it's holding as resistance, falls through it, comes back, reclaims VWAP, and goes sideways on the VWAP. And from that holding VWAP, you could see it ramps from 44. Look at all that volume come in. right here, as it's sitting there and holding VWAP because it reclaimed it, from 44 goes all the way up to $49. A $6 run to the upside. And you just see how effortlessly I'm breaking all of this down. And I'm really keeping it very, very simple. Very simple. Pay attention. I preach to you guys all the time. Pay attention to volume, price action, psychological price levels. Now you can throw in VWAP for an example. Pay attention to that. See how the stock likes to move through all of this and put it together to where it makes sense to you. That's the big picture goal here. And then later on down the road, you can plot on moving averages if you want, like what I do with my 3-minute here. Plot on moving averages, look for VWAP squeezes, and add on to your playbook and your arsenal. So the possibilities out here is unlimited when it comes to the stock market. And the greatest thing about the markets is you are in control and you are in charge of what you trade and the types of plays that you yourself can create and consistently profit from. You got to put that work in. You guys here learning from me, look at me as an example. Try not to copy everything that I do, which you can. You can copy everything that I do. I don't care. But is it going to suit your personality? That's another key question there. Just because I like to trade fast moving stocks, low float stocks, stocks that like to rip dollars at a time, not everybody's going to like to trade those types of stocks. You know, they get freaked out. They can't put together a plan real quickly. The type of trading that I like to do, you really have to be fast and quick on your feet. You have to develop a plan on the fly. My risk is here. My profit's there. Get in. I don't like the way it's moving. Get out. It's so fast paced and moving. You got to keep going and adapting to the chart as it plays out. Not a lot of people like that. It's too stressful. They'd rather kick back, pay attention to a bigger time frame, and trade like that. A lot more calmer and at ease. So, going back to like what I said at the beginning of the video, determining what type of trader you are and what you like to look for is very important and key to your success. And be very picky about what you trade. Just because we're traders doesn't necessarily mean we have to trade every single day. Remember, you're only as good as your last trade. So I hope that I went over enough examples for you guys to demonstrate the VWAP bounce strategy and add it into your playbook. Once again, I'm Mr. Wolf. As I always say, have that patience, have that discipline, and study, study, study. Later, guys.